start my better recording, I realized that the Zoom automatically records, but I prefer this other recording software. But it hadn't. I forgot to set the new microphone up, and I'm like, why is the audio not? Anyway, I got it sorted. Don't worry. Welcome to the Market Watch Group Sunday Market Insights. My name is Scott. I will be your host. Always excited for Sundays. You guys know how much I like Sundays. The chimp is in the cage. We had a little bit of a Professor Chimp computer discussion on Friday. Chimp's asleep. Chimp takes weekends off. At least as far as what we're doing is concerned. I'm sure you've got other chimps in other places over the weekend. But this chimp is snoring. It's great. We get to process the market, evaluate last week, evaluate where we are, evaluate what we're doing going into next week, connect the dots, make sure all the plans are in place, right? This is as proactive as we can be. I need to remind you, as always, this is for education, illustrative purposes only. We don't give recommendations to buy or sell any financial security or product. We are not brokers. We are not advisors. Okay. And luckily, my alerts are telling me when someone joins the meeting. So if you just came in, welcome. Good morning to those of you joining. What are we doing today? Market posture, obviously, talking through each component. We're going to talk about the economic calendar. We know that right now we have more than the economic calendar. Obviously, the randomness and sporadicness of the tariff news makes it a lot harder to account for, and yet it is a very pervasive piece of our market right now. So it is what it is. The hard thing is you're starting to see news outlets who are like, yeah, no one's really scared of tariffs. It's more of a negotiating tool. And you're like, well, then how effective is it going to be? I don't know. Okay. Sectors. So I have a theory. Let's be mindful today when after we're done with our sector analysis for scoring the posture, let's be mindful as we go through our watch list. Do we see that the strongest sectors that we have evaluated in sector rotation are well represented on our watch list? So for me, consumer discretionary was one, as we were going through last week, that I was like, gosh, consumer discretionary has been on top of our analysis for a little while. And yet I feel like there's not a lot on our watch list. We've got Walmart, and Walmart really straddles discretionary and staples. We've got Tesla on there because some of you forced me to put it on there. I'm not that big of a fan of leaving that on there. That's just me. But let's see if we do think there's a deficiency. And if it's not there, is there one? We haven't done any searching and watch lists maintenance for a while, I guess is the word I would use. And in fact, honestly, as I think about it, maybe we'll end up just running 4 or 5 searches anyways. Like all of the growth sectors could maybe use a little scrubbing after all the dust is settling from what we're seeing here, and saying, hey, let's see what that looks like. Okay. We'll build an early week opportunity list from our full watch list. What does that mean? If you're new, what do we mean by an opportunity list? So I don't think that of my, I don't know what we have right now, 70 on our watch list. Of those 70 stocks, I don't think that just like randomly at any given time, any one of those 70 could come up with a trade signal. The ones that are starting, they're already starting. They're already developing into a trade. They've just made new highs. Their trends are intact. They're pulling back. Maybe starting to establish what might be a new support level that equates to a setup. That's the focus list. Is it setting up? Because setups are where we're likely to get triggers. Triggers don't just pop up out of thin air. Oh, look, a trade trigger. So when we think about that, that's the importance of the opportunity list. Is that list of whatever it might be. Usually it's around 15, maybe 20. I put it out. I continue to put it out, but I don't reevaluate it, right? The new things will come, but that's our starting point. And that usually gives us a nice 2-3 days in the market to kind of be like, okay, let's keep our eye on these. Let's manage the trades we have. We've got a list here that looks like it's going to pop, and then we can continue to watch the broader list to see if anything else moves from the broader list to the focus list. And this is what we mean when we start to build routines. Speaking of, I set this up. The trading plan section of the week is section 5. Section 5. 5 is routines. Routines. Big one. What do you do before the market opens? What do you do during market hours? What do you do after the market closes? What do you do on the weekends? What do you do once a month? What do you even do once maybe a quarter and once a year? The once a year, once a quarter, once a month routines, you can kind of get to those later. Those are things like, record keeping, trade plan work, tax statement organization, things like that. Hopefully, as if you're trading, especially in a taxable account, fine. Either you love taxes and you're just going to figure it out and you're going to do the work yourself, or you're going to find someone who's good with trading, right? They have experience with trading accounting. And then you'll have, you'll devise some mechanisms to produce whatever it is you need to for those purposes. But for us, we're focused on I've got someone stuck in the waiting room. Oh, there he is. Press, I don't know what happened, man. I tried to NBIT you like 4 times. It just kept spinning and not letting you in. Apologies. But, yeah, let's get started. I keep working on let's try to get this done and on to, what's today? The 16th, right? 2/16. And on to the implications. What does it mean for how we trade? What time is it? I'm doing pretty good today. I definitely want to hear from you guys. So make sure that you're bringing your perspective into the analysis. A couple of things before we move on and get to the analysis itself. Number 1, don't forget, tomorrow is a holiday. As such, the market is closed. As such, we will not meet for either session. So Monday, the Monday market open. Well, the market still opens for the week, so that will be pushed to Tuesday. So we will meet Tuesday morning, 9:15 a.m. I will make the adjustment to the calendar today, so you will see that reflected. Apologies that it hasn't been done. The second thing is Monday evening Q&A will be canceled. I will reflect that in the calendar as well. There's a few things. The calendar's been a little bit spotty. I'm trying to work actually with the circle which is the name of the platform that we work off of, team, to help me because there's been some issues on their end. But I am working to get that as consistent as possible. So that's the first thing. Then on Tuesday, we will meet Tuesday morning, and then we will have the regular Tuesday evening Trading Foundation working sessions with Glenn and I. So back to the normal schedule. The second thing, Stephen brought up a great point, which I love. And this is where, as traders, we look at the way the market adapts and changes, and then how do we account for that? So Charles Schwab put out an email saying they will be trading about 800 stocks 24/7. How would we work our trade alerts? Well, remember that a good number of the trade alerts really don't do many stock only. It does open the possibility for some stock only trade alerts. And it's not like anything's going to fundamentally change. Right? Maybe a little bit, but not a ton. So, it does give us it's going to be interesting when we see, there's been some things that have traded 24/7 already. It's they still gap. A lot of people are like, oh, there won't be gaps. They still gap. And it's still like, obviously, just like futures. If you look at the futures, let me pull up. Well, anyways, maybe we will, maybe we won't. But if you look at futures like the E-minis, and you look at the amount of volume that occurs in the 6.5 hours that the market's open, right, from 9:30 until 4 p.m. Eastern time, versus the 17.5 hours of the 24 when the broad market's closed. Honestly, there's times I would imagine, I'm going to maybe go look it up and add it up or see if someone has this stat. I'd like to know. But I bet that if you add up all the volume from the 23 hours, it doesn't even equal the first hour's volume of the day. There's just less there. So it's interesting, and I'm open. Like, hey, maybe as a group, we're like, it would be cool if we put some alerts out that we could take on, over the weekend, or, hey, I'm open for it. I'm open to it for sure. So yeah, let's just kind of watch, see, and adapt as we need to. Sandy has posted her posture. Thank you, Sandy. Appreciate that. Let's get started. Let's start with let me see. Something's wrong with my chart. Let me get a new chart. Charts. And detach. Okay. Don't forget, price is always the star of the show with your chart setups. Be very careful, especially if you're new, with how many indicators you put on. In my coaching experience, I have seen times where people would have 6, 8, 10. It's just like, that 4 of those do pretty much the same thing. And their thought is, when everything lines up, now we've got, the perfect trade. My thought is, there is no perfect trade. It's probably never going to line up. And even if it does, it's no better than other times. So all you're doing is creating for yourself a strong potential for analysis paralysis. What are we looking for? Supply and demand. That's what it boils down to. Supply and demand. Buyers, sellers. We look for patterns amongst the behavior of buyers and sellers. And that starts to create patterns within candlesticks, patterns within trends, patterns with moving averages, patterns with indicators and volume. So it's just patterns. We're just looking for things where we're saying, oh, look, that pattern, I've seen that before. And if this happens next, then I expect this, and then I can start to build trades with targets and time frames and stops, and that's where we're at. So, what's the starting point for this? How fast are we going to go today? It'll be interesting to see. I'm at a 1.25. I have no expectation of that changing, but we'll take a look anyways. So remember that we're working on red lines right now, not blue or green. Remember that blue and green are just kind of different versions of each other, where we were like, hey, it's a pretty strong trend, but it might have just shifted. A shifting trend is green to blue. It shifted. It didn't change the trend line. It just shifted its trajectory a little bit. It shifted down a little bit. But we actually said, you know what? When it broke blue, we're like, this maybe feels more like red, right? Red being an older trend that we had measured from before. And you'll notice as we put that red in place, let me put my lines on there highlighting it. Yeah, that's a pretty good representation of how things are moving. Even now, as like it popped, you remember it popped immediately back up above blue. And I'm like, I'm not going to be like, oh, well, now it's blue again. Because the part of the reason that we stopped looking at blue was not that it held the bottom, but that it could never get to the top. So I said, look, if it gets to the top of blue, right? If it gets to the top of blue, blue's way up here. That would be very strong. That's not what we saw. That's not what we're seeing. So blue and green, I leave those there because I do want to have the ability to pull them again. I know some people are like, oh, Scott, your charts, they have a lot of lines. No, my chart, singular, my chart. What chart? SPY. I mean, you can see my volume is ugly. I've got lines everywhere, right? This is the SPY. This is the market. When we say the market's strong, this is what we're talking about. We don't look at secondary markets like the NASDAQ or the Dow. I know a lot of people bring up, oh, the Dow was up. The Dow is the biggest 30. There's a lot of size there, but not a lot of representation there. And what we're after is representation. That's why the SPY is our quote-unquote market. So, looking at that then, yeah, red is solid. Red is where we should be. I'm staying there, 1.25. Let me know if you have any, if you're new, it's a great time to ask a question. Because the question is not really necessarily about like anything other than, what do you mean by that? That's fine. Let me put the question out there. But if you are new, keep in mind that we have videos for this exact analysis. Every one of these 6 core components, there's a video where we talk about what does it mean to us? Why is it important? What are the different ways that we would score it? And it could be a very useful way for you to get caught up. All right. But as I look at my actual score, 1.25 is going to stay the same. Pretty solid long-term score for us. Okay, short-term trend. Now this one's going to be a little bit more interesting. Why do I think that? Well, let me tell you. So you can see that this thing had kind of turned, right? Like if you connected some dots, and sometimes people are like, well, then isn't that slightly negative and that should be a minus 0.5? And my answer is no, that is not how I score the short-term trend. I am going to start to take points away, like a quarter of a point, when it starts to do things like break lows, lower highs. But we really want to, during consolidations, be a little bit slow to whipsaw our analysis from buyers to sellers and sellers to buyers. And we've talked about it, and we've done this exact thing before, and you've seen how it works out. But even right now, you'll notice that, right, we did have, let me go back to the score itself. So this goes back to December 15th. December 15th, right here. And that's when we were really strongly bullish, and then we lost it. And you can see we took a half of a point away. A half of a point away for what? This right there. You can see. It lost that half of a point. And from there, from this point, it really, at its lowest, and even on its lowest, was only there for a morning. But that is really the bottom. Why is that important? Because I want you to notice that we took a half of a point right here. And from there, over the next 2 weeks, when it just sort of did all of this, it didn't get much worse. And we ultimately took another quarter of a point away, but that was it. And then what happened? I'm going to switch colors to highlight this. We're going to go blue. And then we got this. Boom. What do we say we're looking for? Supply and demand. Buyers, sellers. And what do we have here? A huge surge in buyers. And so that gave us some points back. And you can see that it has these tendencies, right? It has these little tendencies. Those are periods of uncertainty. Let me put one more color out there. We'll go orange. You do not want to overtrade and be going bullish, bearish as it goes through these things. You want to be thinking, what is my fundamental positioning right now so that I can trade those times but not be too influenced the other way. I want you to notice that we took some pretty good signals for hedges, and the last one just simply didn't work. It's not because we did something wrong. It's because that's just how it works. That overarching bullishness has continued to prevail. Okay, so what does that mean to us now from a scoring standpoint? All right, so let's go back. Yeah, I knew this one was going to be a little bit more like, if you were uncertain about it, okay, welcome to the club, right? This is not an easy, like, all you got to do is put this on and it tells you all you need to know. That's why we talk about it and discuss it. It's important. So let's go back. So we took that half a point and then it stayed. Actually, it lost another half of a point. I think it lost a half of a point because it had a lower high and a lower low, right? Lower high, half of a point or a quarter point down, lower low, quarter point down. And then it stabilized. So by January 12th, we're looking a little bit more stable. And then that last bullish move gave us a half of a point back. Boom, back to 1 1/4. And then what happened? Then we lost a quarter of that point last week, and that's where we stand now. Why last week? Because last week we had a lower high. Lower high, lost a quarter of a point. But then what? So this, which was lower than these and indicates weakness in the short-term trend, that's why last week it went minus 0.25. But this week, what happened? Here to here created this low. And what is this low relative to this low? Well, you can see by the positioning of my arrows that one is higher than the other, which means plus 0.25. Right? Until this short-term trend finds its new actual trend, right? Where we see it moving like this. That's what we're hoping happens. Right? That's what we're hoping happens. But it's just been kind of chopping ever since this day right here. What's been happening? It's just been chopping around. We know that Januaries have this tendency anyways, but even on the chop around, we've still overall done what? We've moved higher. And now what are we in the position for? Well, I mean, I think that based on this, okay. So let me mark that. Those of you who have scored yours and posted them, especially Sandy and Steve, I am going back up 1/4 of a point. A little bit of a now when we went through this on Friday, I believe I said that I was leaning towards about a 1/2 of a point increase on my score. About a 1/2 a right? I like to have a little assistance with decisions on Fridays. Oh, you guys lost me? Oh, okay, shoot. I might have accidentally hit my mute button. This new microphone. I'm just adjusting still. Okay, but what is Friday? Why do we look at the scoring Friday and then score it for real on Sunday when nothing really changes? Because when you give the full analysis, things have settled. But on Friday, we're looking for help that says, should I carry this trade? Should I pare it down and sell some? Should I close it? Should I put this new trade on? We did. We put 2 new trades on. What helps? What helps put 2 new trades on? Well, if my posture's ticking up, right? If I'm like, hey, my posture is going to increase. Great. That's good. Get some trades on then. Let's put a couple on. Okay. So where are we? Volume. But volume was one that I said I didn't think was going to go. I did not think it was going to go. So let's go real quickly here. Let me take. Now you'll notice I've got a lot of space. So I do like a lot of space on the 6-month chart because I like to be aware of earnings. But when I come here, one of the things that you can do is change the time axis and not have as much. You can control how many bars to the right there are. So now I'm at 7. So I'll go 7 and then 20. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 21. Okay, that seems about right. Okay, what do we have? Remember that we purposefully said no. There. That was only 4.87%, and it was not 5. We were sticklers to that 5% rule. Man's got to live by a code. In this case, a trader has to live by a code. That code is 5%. We're pretty open. Like some people are like, I need 20% volume. I'm like, you're not going to get 20% volume very often. That's, if you really want it, just like for me, 5%. But I do need to have some standard that we stick to. So that's what happened. This one also is not going to make it. You can see that was barely average. This one was not even close. So we have 2. You might be thinking, wait, that's 3. No, I combined because I have discretionary authority over my own analysis. I said, realistically, the fact that part of this volume contributed to this thing being way up here. Ultimately, if you look at the net result of these 2 days, it went from here to here. That's what happened over those 2 days with that volume. That's not really hugely bad, right? So yeah, I took some discretionary liberty and said, I'm making that 1 day. So I have 1 there and I have 1 here. So I still have 2 to 0. 2 to 0 is still in favor of sellers. I'm still calling this minus 0.25. Next week, though, when this moves 5 days, 1, 2, 3, 4, 5, and is that where, and it's in that spot, this is where it's going to end up getting dropped. So I'll say, oh, that's stale. And if this is all that's left, and this is 5 days over here, then it all depends on what happens next week. But because I'm dropping one of them, if I only have this 1 remaining next week, my score will go to 0 if there's no new selling days this week. If there's a new buying day next week, it'll definitely go, right? So I'm thinking that organically right now, this is inching its way back towards a 0 score. So this was where there was some concern for us. You'll notice too, here's the starting point. Here's the ending point. Our sanity check is bullish. That's bullish. But there's been enough concern that our score has remained negative and still does for me. I don't know about you, Sandy, Steve, and anyone else who's already scored yours. But I guess I could scroll up to see Sandy's. Sandy is a 0 now. Sandy is a 0 now. I'm still showing a bit of weakness. I'm going to leave mine at minus 0.25, but if nothing happens or if buying happens, as long as selling doesn't happen this week, I will increase that. We'll see what happens. Okay, major market. I know I'm not meeting my goal of being done with this by analysis by 9:30, but I'm getting closer. I'm going to fly through this one. What do we have? We have bulls at the top, NASDAQ at the top. We know that we've had a weird little back and forth between the Dow and the Russell. That the Dow has started winning, which has caused our score to drop. Right? When we see that the Dow, you'll notice that we went from a 0.5 when the small caps lost their leading position. That's when we dropped from a 1 to a 0.75 to a 0.5. And then when the small caps start losing to the Dow, well, then we're like, wait a second, that's even worse, right? And so we've eased that a little bit. As long as the NASDAQ stays in front, we'll likely stay 0.25 or 0.5, but we'll see what happens here. So that's where we are contextually coming into this analysis. Let's drop this down to 133. Get this add out of the way. Nope, I added too many 3s. There we go. What do we have here? You can see NASDAQ on top and the S&P. And then you can still see that the Dow is pulled in front of the Russell. They've both gone sideways now. It's not like it's gotten worse from last time, but certainly there is concern there. $66. Yeah, the small caps you can see are struggling down there. We're far away from anything else, but as long as this NASDAQ stays on top, we'll be at least a quarter of a point. But that's where I am with the Russell, with the Dow surging like that. I had to take it away. If I see the Dow ease up or if I see the Russell catch up, I can give it that quarter of a point back. But you can see the Dow on the short term is the strongest. So I don't think it's defensive. It doesn't feel defensive, but I can't rule it out yet. So I'm going to leave my score the way it is until I have a different ability to do so. Okay. Let's go do sector rotation. So where is my posture? Yeah, 0.25. I think that makes sense. Sector rotation, that's where the strength has been. Steven, you're minus 0.25. Oh, you're a negative on major market. For me, with the NASDAQ on top everywhere except for just the 22-day, I can't be negative with the NASDAQ in that leading position. At plus 0.25. Plus 0.25. Okay. That makes more sense. Yeah. Okay, let's do sectors. Sector has been strong. Sector's been strong. Who's on top? Communication services. So it was discretionary. Now it's comm services. That's growth replaced by more growth. Who else is at the top? Financials. That's 3 out of 3 at the top, growth sectors. Down here, what do we have? We have technology. There's the market. And utilities. So we have technology and utilities. Utilities is the one that we said, well, with AI and crypto, we can't really judge that as defensive necessarily. Then we go down to the bottom, rounding out those that are leading industrials, also growth. Defensive, right? So then we go through. That's the tone. We like the way that's set up. Let's go to 133. That's 9 months to 6 months. Discretionary, comm services, financials, technology, all the usual growth suspects still at the top, still giving us what we need for this. I'll tell you, it's interesting how the most bullish aspect of our market posture has been sector rotation, which has been nice to have, something that we can orient around. And you know, the long-term trend, sector rotation, and the VIX has stayed fairly positive as well. And those are the kinds of things that as the markets get shaken, you have to be able to say, where's my buoys? Where's my lighthouse? Where's my way to kind of not get lost in the storm here? Right? On top is communication services, big rally there. Still discretionary, still financials, all right, which is why I said I want to make sure we have a good representation of these. I know we have a good representation of financials. I think we have a pretty good representation of industrials, but that'd be worth a look. Definitely we want to look at discretionary this week. What else do we have? Staples is there, technology's there. I mean, this looks fantastic. Nothing's gotten worse. I'm still a 1. A little bit of Staples, like, ooh, what's going on with Staples moving up there? But I'll tell you, remember that a lot of places will characterize Walmart. We had a phenomenally successful trade alert on Walmart. I'm looking for another one. Well, Walmart is a leader, and I look at Walmart straddling the discretionary, non-discretionary staple space. But it's in there, and that's going to have given it a good amount of that strength. So, okay, let's go back to 6 months. So both of those stay the same. 0.25, 1. What's left? The VIX. This is where I thought I might get another 1/4 of a point. We'll see if that happens. So I'm at a 4.5 right now. Let's get the VIX up. Remember that right there signaled was not a higher low. It was not a higher low. But it did. Like we said, hey, if the VIX is low and looks like it's bouncing, is that a time that we could consider a hedge? Yes. How did that hedge work? It didn't. Oh. Well, then it worked. Because that's how insurance, which is what a hedge is, works. The fact that we look to actively make money on our hedges, some would say, is that greedy? I don't think it is. I think it's ambitious. And we've done pretty well with that. I would challenge you to go back. Those of you who have been in the group, look at your hedges as an independent piece of your 2024 trading. Isolate your hedges. How'd you do? if you lost a little bit, but you were profitable overall, that means that you used the hedge as insurance like you do your car, right? If your car is intact at the end of the year, well, yeah, your insurance worked. You didn't get in an accident and everything's fine. But if we can insure and profit, that's the objective. So look, if you ended up losing, I don't want you to be like, the hedge before that was really good. Sandy said, yes, that's how hedging is. If you're going to hedge and then be like, well, that last hedge didn't work, I'm not going to do it anymore, then you missed the point. You didn't understand the assignment, right? The hedge is an insurance. The fact that we as a group believe that our insight can help us profit from hedges, not just lose money and then sometimes offset, but actually come away net positive. Like I said, I feel like that's ambitious but attainable. So that's the objective. So if in a one-off situation you lost some money, you shouldn't be like, oh, what's my mistake? Your mistake is thinking that because you lost money, you made a mistake. And that's common if you're new, right? A lot of times I'll have traders that would in coaching, they'd be like, oh, Scott, I here's my setup and I did this and I had this, and they give me all this great. Sounds big. All of it sounds good. And then they're like, yeah. And so what did I do wrong? They say, what did I do wrong? I'm like, well, what makes you think you did something wrong? Well, I lost money. Oh, okay. Now I see what you did wrong, right? And it has nothing to do with the trade you described, but the expectations you set coming into that trade, that if you do everything right, you're going to come out on the other side with profit. That's the mistake. You can do everything right, still lose money. That's part of that's what we have here. And I'm sure if you've ever done something in business or sales, it's the same thing. It's part of what we do. So, all right. But the fact that hedge did go wrong created what? Well, we went down, then up, then back down. And the fact that we went back down, we didn't know it though. What's interesting is you're like, oh, it's obvious. It wasn't obvious until Thursday, right? It wasn't obvious until Thursday here when it actually took out these lows. Then we're like, oh, yeah, okay. And what happened? This became a new low. And this was my old low. So what do we know about that one arrow compared to the previous arrow? It's lower than the previous arrow, which means that is a lower low. Yeah, lower low. And we're really getting flirty with this level down here. So I don't know. Like, are we going to try to push right through that? That'd be very bullish. We could stall in the next day or two, right? And then come back up. And then this would still be, if we got back up to 16, something like back there, we could still have even another lower low still, which would give us another 1/4 of a point. So yes, I am raising mine 1/4 of a point. That's the bottom line. That's the bottom line. Let me get to the bottom line. That is going to go back up to 1.25. And we already have a sense of what it would take to raise it again, right? So right now, I have an idea of what would it take for my volume to go up 1/4 of a point. I have an idea of what would it take for my major market to go up 1/4 of a point. I know what it would take for my VIX to go up 1/4 of a point. Long-term trend, unlikely to move. Sector rotation isn't going to move. It's at 1. There's a maybe there, the other 3. So yeah, as of right now, as I look at this, I think I just went up 1/2 of a point to 4.75. We're maintaining in this 4 to 5 zone, right? Which is helpful to think that we're not going to keep dropping into a correction. We're hoping that we can then push out of this with those 3 improvements that we talked about. If we get them this week, that puts us to a 5.5. That was quite bullish. right? I know that some of you maybe got a taste of the 6s and the 7s. We don't get a lot of that. 5's pretty good. We want to be trading confidently in a 5 market, right? So there you go. Now, that's what we're talking about. So is what does this mean? That we've increased from a 4.25 to a 4.75? That we're stable within this kind of a range down in here? Remember, this all stems, right in November, December, we were 6s and 7s. And then all of a sudden on that December 15th, that fateful Sunday that I left for the UK, then Monday morning traveling, woke up to this. And I'm like, what? Yeah, it was an interesting part of my travel time to have that. That was the start. And yeah, it chopped around. But here's what I would say, right? How'd you hold up through all of this? And I would break it down into this part. I know we got a couple of trades on here. Because why? Because even though this was at a new low, we were still bullish. We were still on that day. That was on somewhere between 1.6 and 1.13. That was still a 4. We're still a 4.5. I'm still bullish at that time. I'm still going to look for bullish trades. And I'm still going to be reluctant to take bearish trades. Remember what we talked about. Every time you're like, oh, it's this, it doesn't give you much. Then it bounces back up. Gives you this, then it bounces back up. Gives you this, bounces back up. I want you to notice that any time you would have tried a bearish trade anywhere in there, you would have likely failed. You would have likely failed. That's why we're not like, oh, let's trade bullish, then bearish, then bullish, then bearish, because we're traders. We're like, hey, we're traders, so we want to stack probability as much in our favor as we can at any given time. What does that look like? Well, in this market, we said we're willing to take a bearish trade. In fact, we were willing to put one little hint of a speculative bearish trade on, and then we're like, nah, that didn't work out. Nope. Okay, that's information. That tells us something. So what am I thinking? Well, we just put 2 new trades on Friday, which are they still valid come Monday? If you missed them, yes. The whole analysis is still good. If it gaps up hugely, well, unfortunately, no. But the answer is yes, absolutely. They would still be valid. Let me clear this. Let's crank through the watch list so I don't take up too much extra time, but I am inclined to taking a little bit extra of your time sometimes. This tells us the market has been very good since the... I don't know if it tells us that, Stephen. He has done nothing yet to upset the trend. We haven't broken the trend, but we've definitely had our trends upset. That's why we're no longer a 6 or a 7 and we're a 4. We're okay, and we're hoping that we can come out of this. But I would argue... I would argue this equals uncertainty. It's not like, oh, they're bearish, they're smashing it down. I would argue that this is, this is uncertainty. You can see this second one is right at the start of the election or start of the new administration, right there. That's where the new administration began. So over the past couple of weeks in the new administration, what has the market done? Yeah, it's chopped around sideways. Has the overall held up? Yes. I'm definitely, and I'm hopeful that the obviously the tariff talk is not conducive to strong markets. If it achieves a greater political good that the market may see later on, okay, that's not going to be beneficial to us now. It's just empirically not. Okay, did not get the trade until... the MS trade. The MS trade we worked on, but it should have come out like 20, 25 minutes. We worked hard as a group, those who were live, to make sure that it should have gone out 3 ways. And in fact, remember that. That went out via email. That went out via Circle notification. And if you have opted in, it will have sent you a text as well. If you have not opted in, I'm going to look at creating a page where you can go put your name down or something to speed up the opt-in process. But they're pretty restrictive. We can't just send texts like, oh, we'll text you. No, you have to give us explicit permission. So that's what we're working on for that, is to enable you guys to give us explicit permission for those to come through. Okay, so let's go to the watch list. Start from the top. Apple. I mean, I like Apple. I'm bullish on Apple, but it's not setting up right now. It's 3 days into a trade, possibly 4 days into a trade. I am going to keep it on my list though, because it could flag at any given time. Amazon is absolutely setting up for a trade. This is a leader in the consumer discretionary space. Consumer discretionary is a leading place. We definitely are looking for an alert to develop over here. Yeah, absolutely. Unequivocally, yes. App11, we like it, but it's just a little bit untradeable right now. We'd like to see it pull back and give us a setup of some kind. I actually still have AXP on the list, but I was looking a different way. You'll see. But if you took it or thought about it, it is bouncing off the 50. It failed us here, and we ended up taking a loss on an alert as it tried to come out of there. But maybe. Where did we go instead? We also looked at Bank of America. Right? We played with it. We thought about it. It's a nice little cup and handle type setup. Boop, boop, boop. And then here's this. But AMSC and APO from my watch list, I must have. Do you think they belong again, Miguel? Are they worth consideration? Is that why you're wondering? I'm certainly happy to pull them up. Take a peek. BX, no. So BAC, I would say yes. If you took a trade on BAC or were thinking about a trade on BAC, I'm in agreement with you. If you did BX, I'd be like, no. You'd be like, well, it's bouncing, Scott, but it's bouncing from a lower low. Lower low. It's below this one. It's below. I'm not interested. This is in consolidation. There is no picking lows here. I'm waiting for this to give me my penance pattern. Get up at least near the 50. Then when it pulls back, that higher low, that's what I'm looking for. Where would that have been? Well, it would have been something like back here. Up, down, there's a good trade. I would have taken this one too. Right? And you could have taken this one coming out. Boom, right there. So that's what we're looking for, is at what point are we convinced the buyers have regained control from the sellers? Supply, demand. Caterpillar, no. Same situation. It's down too far. CIEN, yes. Right? It's doing a bit of a little sneak. It had a huge drop here from that Chip Madness Monday, but it's now making this recovery. I'm back in favor. CLS, even more so. Both of those are similar. And I'm looking at CLS. You can see it. That was arguably a trade. It closed above the previous day's body, and the stochastics turned a little bit. So yeah, that's definitely one I'm thinking for Monday or for Tuesday. Oh, that was the other announcement. Did I announce that? Oh yeah, I did announce that. If you were late, there's no morning class tomorrow because the market is closed tomorrow. That is getting pushed to Tuesday. Tuesday morning is the market open, and then Monday the evening beginners Q&A is also going to be canceled due to the holiday. Okay, Cisco. Yes, it's strong. We need it to pull back, but if it pulls back, I definitely want to trade it. Delta's a little more iffy for me. I don't know. Miguel, you had traded this one. Are you done with it? Would you consider it if it held the 50? I'm going to leave it off mine for now. Duke Energy, if it can hold the 50, I would say there's something in utilities there. Energy, rather. Fastenal, I'm going to say, yeah. It's holding up after this pullback. It's trying. Flex, 100%. So Flex, we had a trade back here, shot up, and then it just is kind of held on. So, if you took profit, some of you might have took all your profit. Some of you might have taken some and held some. I'm looking at this thing, absolutely getting ready for the next one of these. It could be as soon as Tuesday. Fox A, overextended, but it looks good if you were in it. I'd say Bitcoin actually looks like it has a little bit of bullishness to it. I'd put that on the list. GBTC. GE Vernova, that's a maybe for me. Sneaky reversal. GLD, starting to pull back. That looks bullish if it pulls back and stabilizes. Google is a no. Goldman, yeah, I like Goldman. We ended up taking Morgan Stanley instead, but Morgan was up for consideration on Friday, along with Bank of America. Howmet, it's bullish, but it needs a pullback. I'd say still worth it. Yeah, look at the size of our... Look, I want you to notice how many of our stocks still look so good and how many of them are actually in setup position. That was one I thought about last week. I took it, but I didn't alert it. But did anyone else take that? Let me know. IP. IP, I would say, is trying for a little sneaky reversal. If you're not sure what I mean when I say a sneaky reversal, here's a consolidation. It didn't have much. Usually I'd like to see it like up in this area, but it didn't get there. And then it pulled back. But then what? But then it did give a higher low. So it's like, oh, okay. Yeah, maybe this thing goes anyways. And then if you miss it, you try for the next one. If you're in it, you try. That's all we can do. That's all we can do. IWM, not much there right now. KKR. Oh, KKR, you're so disappointing. I like MasterCard. Possibly setting up. I like Meta, but it just needs to do something, right? Needs to pull back, and then maybe. I like Morgan Stanley because that was a trade that we built together. We built it together on Friday afternoon. You can see what it is we're looking for out of this. The stochastics down here had a nice little pinch. We were able to engulf and get above this prior candle. All signs are a go. Microsoft is a no. NDAQ. NDAQ gave a signal on Thursday, and then it hiccuped on Friday. If someone out there was like, "Yeah, I took that," I'd be like, "I get it." And now you got to just deal with the hiccup. It's not right, but it hasn't gone wrong enough that I'd get out of it if I took that first trade. Netflix still looks bullish overall. Nvidia still looks bullish overall. Although it didn't even give us a sneaky reversal, but it still just sort of came back. So I guess everyone's little deep think or whatever that deep seek model just is not going to be that much of a issue. I'm still bullish on PLTR, looking for a setup, looking for a pullback. Qs look good. Roblox. So there we took a sneaky reversal. It got hit on earnings, but got most of it back. And then it's like it pulled back here and then it turned. Right? And then it turned. And it's funny because my thought is if you took out this last little bit and you took this out right here and all you had was just this kind of a, you'd be like, oh yeah, this looks great. I love it. We took it, put the trade on Friday. Okay, Reddit, no, but close. certainly I would look at Reddit as an opportunity. Rocket Lab, I don't know. So taking so long to do anything there. Snowflake, I don't know about that one either. That was new. So if I took, problem is it went 7%. Took the Roblox as well. Very nice. Love it. We ride together. Together we ride. SPY. We know how that looks. TJX. Oh, I don't know what happened there. That was crazy. A couple of these where it like gave this little turn and then just like, whoom, came back down. Allowed my kids to buy Roblox credits. Oh, love it. Love it. Toast was viable other than the fact that earnings are in a couple of days. Tesla's looking like a dead cat bounce to me. I'm just saying. TSM I do like. And TSM is looking more like a setup potential. So if we wanted to get something in technology, that might give you an opportunity to do so. Bullish dollar index is settled down a little bit, which is good. Walmart, you know that I want to have Walmart become a trade again. I don't know if she's here or not. Kudos to Ellen. Nope, she's not. Ellen just kind of rode that one out and took a bigger piece through here than we did. This was what we got, basically. It was a great trade, and then it just kept going, and then it kept going. Is this a record? No, I've seen us in the 20s, but we're seeing some great growth. I love it. I love you guys interacting with each other. The community dynamic of the group is really shaping up in a way that I was hoping. I love that. I think it's going to be a huge benefit, a huge resource. I think you guys don't know, maybe, but trading can be a lonely game when you're just you and your charts. We talk about it when we coach people. Like, hey, you really want to try to find a way that when you're done here with coaching, we see that sometimes where there's this, they lose that one-on-one interaction and there's an issue of the drop-off. These types of community interactions, which are hard to find, I think, that are quality, are a huge part of the journey that make such an important foundation to build on. Yelp tanked with earnings. Oh, let's take a quick peek at that, and then let's talk about the trading plan real fast, and I'll only be 10 minutes late. 10 minutes isn't bad for me. You guys know 10 minutes is not bad. Woo, sure did. They sure did. This is why we said we don't trade earnings. We were all like, yeah, we like the way that looks prior to earnings, but we don't trade earnings. Very interesting. Okay. Lastly, but certainly not leastly, what do we have? We've got a great posture. We've got a great focus list. 1, 2, 3, 4, 5, 6. 3, 4, 5. We got about 25 stocks on the focus list. Alone on a cargo ship. Yeah, right? Love it. Love it, Kevin. Love it. Lastly, this week, we are now in the second half of the first full cycle of the trading plan loop. We are past section 4 onto section 5. It looks like an easy one. You're like, oh, that's it? Daily, what do you do before the market opens? This should look like some context, which means like what time will you do this routine? How long will the routine last? Then bullet points in order of what the routine looks like. I'll do A, B, C, D, 1, 2, right? Whatever that is for you. So you have before market open, during market hours, after market close. Not everybody has the ability for that, right? And when I was coaching, there'd be people who were like, look, I'm not able to get to this till 6 o'clock at night. Okay, then you have an aftermarket routine, and everything has to be built around that. I mean, ideally, you can at least get on your phone and check orders and like have some level of like during market maintenance, even if it's not a full routine. But this is part of what you need to be thinking about is what do you have the ability to do? Press, that's so funny. I thought to myself, yeah, is he actually like out on the ship sometimes? And yes, there is an example. There is an example copy, which I'm going to show you. And both are available to you. If you're new, both are available in the resources. You have the ability to download a fully fleshed out sample trading plan so that when you get to these routines, you can say, what is this even supposed to look like? Daily routine before market open, which would be at 7 a.m. Mountain Time for me for 15 minutes. And what am I going to do? I'm going to review the overnight news. I'm going to analyze the futures, check the calendar, scan for pre-market movers. I'm going to set myself some alerts. I'm going to review previous day's trades. Update my short list if I need to, prepare a trading plan for live trades, right? That's for I don't mean like prepare a trading. This is our trading plan. Prepare a trade plan for any trades that are on. Check the indicators, monitor, right? So these are the things that I'm doing. They can also use the new Excel trade for 200 trades with 3 exits. Yeah, absolutely. Thank you for providing, Stephen. Much appreciated. During market hours, I do 10 a.m. for 15 minutes in the last hour of the day, and I do these things. After market close, sometime in the evening, and I do these things. And they're all going to just sort of keep the continuity of what I do during the week. What do we do weekly? What's the very first thing we do? Conduct market posture routine. That's what we did. Searching, keep watch lists fresh, watch list maintenance, update your trade log, create a sub watch list. We did that. Next week's market. What do we have? Oh, we forgot to do that, you guys. Hold on. I said 10 minutes, but I lied. God, I hate when I lie to you. Real quickly, economic calendar. What do we have? President's Day is closed. We have Empire State Manufacturing on Tuesday, some housing on Wednesday, Fed minutes. I don't think we'll see much there. Thursday, not much going on. Friday, it's pretty light. We're pretty much through earnings, so we don't have a lot of economic news. What does that mean? It means that we're more sensitive to news. That means we're even more sensitive to news, right? To the news of tariffs potentially. So we'll see. I'm excited for it. It's a short week. We'll see what happens. I will see you guys Tuesday morning, 9:15 a.m. Eastern time before the market opens. It's great to see everybody. Thank you for the extra 12 minutes. I appreciate it. Great session today. I feel like we have a real good sense of the market right now, coming in with some confidence. It's great to see everybody. Enjoy your day off tomorrow. See you Tuesday. As always, happy trading.
Recordings